Hello everyone and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for Infinox on Friday the 14th of October. Now we had a massive turnaround on major markets yesterday. I'm going to show that through the forex charts with I've got the Aussie dollar, looking at commodities with the oil price, and also the equity markets with the DAX. So starting off with the Aussie, big turnaround. What we saw yesterday, massive sell-off on, well, the dollar strengthened significantly in the wake of the US inflation data. Then there was a big turnaround intraday, big risk rally. And we've seen a bull hammer forming on that Aussie. Now, it's interesting because we've also seen this coming through on the Kiwi as well. Big reversal signal there. Bullish divergence on the momentum on that Kiwi chart. But for the Aussie, what we've seen is this big turnaround. And the key is this downtrend channel that we've been in for the last month and a bit on the Aussie is now going to be tested to the upside. But look at this resistance overhead, this resistance that we have on the Aussie, which comes in around this sort of 63.60 area up towards 63.90. Big resistance overhead. If that can be overcome, then that is a recovery pattern in play. But look at this RSI. Essentially, it's just unwinding from oversold. On a near-term basis, this is a buy signal, crossing back above 30. But is it just an unwinding move? I still believe that it is a sell within this downtrend channel and a rally within that downtrend channel. If it starts to come up against resistance, and as I said, that overhead supply around that 63.80 area to 63.60 is important. That is going to be the key question. Is that the point at which the market starts to falter and turn over again is the question. So we've got on a near-term basis this 4-hour RSI, which is already unwound back towards this sort of 50s area. If I sort of zoom out one more level, you can see that that's consistently throughout the channel has been a moment where the rallies have started to falter and the market's fallen over. So this is a crucial moment around this resistance. If it can break through this resistance and move higher, then that signals a bigger recovery, certainly towards the 65 and above area. So this is a really important moment. Is this a technical rally that just starts to falter once more and fall over? I'm still a seller into strength, and my favoring would be that the likelihood is that this is going to start to falter again and the dollar strength will take hold once more. But just for now, obviously this technical rally is in place. And on the oil price, well, it's interesting because I did a video this week saying that all these trend lines are being broken. You've had this big downtrend that I think is a 4-month downtrend, actually. Big 4-month downtrend that got broken after the OPEC Plus decision to cut production. We've seen a retracement of that, which has then subsequently broken the recovery uptrend, but it's brought it back towards this pivot line around 93 big figure. And interestingly enough, that is around about where the 50 mark on the RSI comes in. So these are two levels that I'm looking out for on a near-term basis, this 93 big figure area pivot and also the 50 mark on the RSI. If it holds above that, you're positive and you're looking towards a test of the 99.50 high and the $100 area again. A breakdown below 93 and you could see once more a test of this position here between 88 to $90 area, which is another pivot line, and that's protecting the low 80s. So it is a really sort of a pivot moment. How the market reacts around this pivot. Yesterday, positive candle, moved higher, but can it continue to move higher? Because it's back towards this sort of falling 55-day moving average once more, on also the old overhead supply that comes in around that 96 area as well. So really important moment for this oil price now. Finally, on the DAX, we've seen a massive turnaround. Just zoom in once so you can see this massive bullish engulfing candle, bullish key one day reversal, whichever one you want to call it, looks strong, right? And it's positive again today. But we had exactly the same position just a couple of weeks ago, where we had a massive bull key one day reversal and then a strong move the next day, and then subsequently the market just fell sharply back again. Now, my understanding is that this is a short covering rally that we saw yesterday. Nothing really fundamental that drove these. Wall Street drove the market, and then obviously European equities responded. Question is, how do they go? Well, on a near-term basis, this short covering rally has legs in it, and you can argue it's still moving higher, and it is moving higher, and it is now testing this overhead supply of this, and this is massive overhead supply. If you sort of move out, you can see the really important March low and June lows, July lows, all this overhead supply that comes in, all these old lows are old stale bulls. They're all old traders that sitting in long positions thinking, wow, I'm underwater. What do I do with this trading position now? So can it get through that resistance is the question. That the resistance of the reaction high that we saw around 12,700 last week is the resistance. Getting through that and you can get back towards that old big downtrend, and it is a big downtrend. That is the primary downtrend that comes in there, and that's up around over the 13,000s area at the moment. So this is a key moment. That 12.7 area is key resistance initially, and if it breaks through that, you can see a move back towards the downtrend. 50 on the RSI, again, and a key moment. So all of this is really important positioning now. Obviously, 2 days of rally sold off. Are we going to get the same? Well, I'm still a seller into strength on the DAX, but it'll be interesting to see how far this one can go. So I wish you good luck in your trading today, and I'll speak to you soon.